Trying to control China's shadow banking system is a bit like playing whack-a-mole. No sooner does the government clamp down on one source of credit than another pops up. The fastest growing part of China's shadow banking system are loans between companies. Known as entrustment loans, there's very little data on where this money is actually going. But a handful of academic surveys from the past year shed some light. The findings? Most of the money is going to those parts of the economy where Beijing is trying to limit the supply of credit, like property developers or steelmakers. However, at the same time, these loans might not be as risky as the massive increase in issuance might suggest. Last year, net outstanding entrustment loans increased by more than $400 million, which is twice the amount of the previous year. Most of these loans, as much as 80%, are between related parties. Conglomerates use entrustment loans to move cash from units that have it to parts of the company that need it. Now, these loans are typically very low interest rates and aren't backed by collateral because, well, for all intents and purposes, they're internal transactions within a greater company. However, according to those academic reports, the remaining 20% are between companies that don't have any relationship, and they're the ones to worry about. Interest rates on these loans can be higher than 20%. Regardless of whether the loans are between related parties or not, most entrusted loans are going to property developers and industries suffering from excess capacity. The risk is that healthy companies are helping to prop up unhealthy companies. Now, that's fine unless there are defaults, at which point the woes of the unhealthy spread throughout the economy. That could potentially rebound back on the banks as well, particularly if companies have borrowed low interest rate loans from the banks and then on-lend them as high interest rate entrustment loans, making a killing on the difference. Now, as long as companies can pay back the firms that they borrowed from, that's not a problem. But if they can't, that puts pressure on the funding chain, which ultimately leads back to the banks.